us if he gets out of his meeting in time, but I'll go ahead and call to order the March 23rd, 2022 meeting of the Budget and Audit Committee. First item of business is the approval of the minutes. Those were sent out to everybody by Ms. Sandy earlier in the month, and I sent them again. There's no corrections or additions to those. Those will be approved as submitted. The first thing we have under information is our fiscal year 21, our audited financial statement review. We have Mr. James Bentz here with Malden and Jenkins. I believe he's going to run us through his presentation and have an opportunity for some questions and discussion if need be. James, thank you for joining us.
Thank you. And before I get started, I know everybody's got printed copies. If you want a larger version of what's up on the screen, I brought those. Can pass them out.
I was going to say, it's also in your packet.
If you would like that.
Thank you.
As we get started, just kind of a general status update of where we are. We've pushed the files through our review. They're currently in processing, so they're doing all the spell check, report footing, and processing so that we can be as close to ready to go as possible. I believe everybody's kind of up to date. Obviously, at this point, we're waiting on the CRA audit to get completed. There are 3 parts of your financial statements that we don't do the audit for those entities, and so we rely on their auditors' opinions as it goes to our opinion. With the standards as they are, we need to get their opinion on their financial statements. We've got draft numbers, so we've dropped those in so that, again, we're hoping probably by Monday, we'll be ready to print final reports. We just can't date anything until we get their audit report dates. And so once we get those, there'll be some files that I'll send to Bobby that he'll need to sign from a representation standpoint, acknowledging the completion of the audit, but all that should go relatively quickly. And we've kind of gone a little bit out of order, if you will, of getting our stuff done before they're done so that we can turn it around real quick. Because as of right now, we do have the contract with the state to be submitted by March 31st. Now, if we need to, we do have the option to extend. We file an extension with the state and move it back if CRA doesn't get that issued in time, as well as I was mentioning earlier, we do have this year there still is an extension for the federal filings that does go out till another 3 months. So there won't be necessarily any negative repercussions to the city if we don't make the March 31st, but we're trying to make sure we do all we can to make sure we do make that date. So that's kind of the status of where we are. So everything you have that we'll go over today is in draft form. We don't expect any numbers to change, but there may be a few rounding issues that get caught in our processing process. So that is happening right now. But again, we'll kind of get into the presentation. And so one of the things I like to kind of start off with, just to introduce Malden and Jenkins and myself to you all. Obviously, this is our first year working with the city. I'm going to start on page 2 of the presentation. And so Malden and Jenkins is a regional firm. We have offices that are in 5 different states, and we have 12 offices throughout those 5 states. Your audit team came out of our Chattanooga office, which is where I'm located. But we have over 600 governments that we work with through all of these 5 states. And we have clients in a few other states. We just don't have offices in those states. And so local governments is something Malden and Jenkins is very heavily invested in. And so it's something we spend a lot of time working with. And we have 11 partners, myself included, who do nothing year-round but work with local governments. And so we do have kind of a little difference of a stance when you look at a public accounting firm, because about 30% of what our firm does is attestation working with local governments, whereas a lot of firms kind of tend to be more heavily weighted in tax season. We have a very heavy audit service in our firm, and it's split pretty equally between local governments, nonprofits, and banks. And so that's kind of more of our bread and butter. We do have tax practice, obviously, but it's not our driving component of our firm. So on every audit, we have 2 partner involvement. We've always had that. Now, under the new Yellow Book standards, you are required to have a second partner involved so that from an independent standpoint, we make sure that there's no bias on the engagement partner's perspective as they're in relation with the client. And so I served as the engagement partner. I've been with Malden & Jenkins now for 18 years, and I've done 2 audits in my entire career that weren't local government. So when I say I'm 100% local government, that is all I have done in 18 years. Meredith Lipson served as our quality control partner. She is not. Our quality control partner rotates generally every year. They are not involved in the audit. They certainly can be called in if we have unusual situations where we need their input, but they kind of maintain that independence, and they're kind of our quality control check on the back end. And so she's been with Malden Jenkins for 29 years, and she served that role for us this year. On page 3, kind of where we like to kind of emphasize the results, if you will, at the high level. We did issue, or we will be issuing, an unmodified opinion on the financial statements for the city. That is a clean opinion stating that the financial statements are materially correct as presented by management. Again, in the spectrum of the audit, management prepares the information in the financial statements, and our objective is to issue an opinion as to whether or not they're materially correct as presented. We do conduct our audit in accordance with generally accepted auditing standards as well as government auditing standards. And what that means is those standards are not written so that we provide absolute assurance or we test 100% of the activity. We're not providing that level of assurance. It's not what an audit objective is. Our objective is to give the opinion as to whether or not financial statements are materially correct as presented. And so we do scope testing, we do sampling, and we do analytical work so that we can render those opinions. For your audit, our contract did not include the audit of Jackson Energy Authority, the CRA, or Jackson Transit for the year ending June 30, 2021. So those numbers are in your financial statements, but as our opinion relates to those, we rely on their independent auditor's opinion on their reports. And so we've obtained Jackson Energy and Jackson Transit. We've got their opinions, and they're in the financial statements. And again, CRA's numbers, we have their latest, greatest draft, and they don't anticipate numbers changes, so we've got their numbers reflected in your financials. We just don't have their auditor opinion yet. Along with your financial statement audit, we also, because you're a government, we have to conduct your audit in accordance with governmental auditing standards. And through that process, we're required to identify any weaknesses we have in internal controls. And so we did issue that, or we will be issuing that report. Sorry, I'm going to say that a couple times before I get to the draft comments, but we will be issuing that report concurrent with your financial statement opinions. And we do have a few material weaknesses that we'll get into as we get to the back, but that report will be dated the same as your financial statement. You all also had a compliance audit this year where we conducted a testing and reporting in accordance with uniform guidance for your federal expenditures. So anytime that a local government has over $750,000 in total for federal expenditures, you're required to have a single audit. And the way those programs are selected for testing is based on risk assessments and defined thresholds. So if you have under $25 million in total expenditures, your threshold for what they call Type A programs is $750,000. So anything that's a Type A program that's not been audited in the last 2 years is going to be a high-risk program, and we have to audit all high-risk Type A programs, and then there's other guidance that determines what testing you have to do kind of after that. For your June 30, 2021 fiscal year, we had 2 programs that qualified as testing. One was the Community Development Block Grant, and one was the new Coronavirus Relief Funds. And so both of those programs were tested as part of our single audit, and we will be issuing unmodified opinions with no material weaknesses and no instances of noncompliance. And so those are as clean as you can get on a single audit report. So on page 5, the kind of item, and I'm going to skip around a few items as we go here, not necessarily go through every page, but certainly feel free to jump in if you have a question. But the one item on here that we always like to point out is, it is in our opinion, but it doesn't always stand out when you read through them. We do review management estimates and judgments that management uses in the presentation of the financial statement. And through that process, if we identify anything that's kind of outside of accounting standards or even industry norms, we try to report that to management and governance so that you all be aware of those situations. And we did not notice anything kind of outside industry norms or industry or accounting standards that you would expect to see from an estimates and judgment standpoint with your financials. On page 6, 2 things to kind of point out here, and again, we'll get into the details a little later in the presentation, but we did have some audit adjustments in this year's audit process. Those have all been provided to management and will be or are incorporated into the financial statement so that they'll roll forward for your next audit, for your next fiscal year. And so The other item is we did have one past adjustment, and so obviously from an audit perspective, when we identify the need for an adjustment, we'll present the need for an adjustment to management, and if both parties agree that it's not material to not post that entry, then it can be passed on because of its immaterial nature. There's a certain threshold where we still have to report those type of adjustments to governance, to you all. So this one's included in there. So what we're passing on is we did record through this year's audit the total liability that's owed to the Education Foundation. However, because it's not been historically reported, there is a component that has been incurred in prior years and should have been reported as of last year. To that point, $300,000 was not deemed to be material to the prior year, so it's all reported in this year's activity. So the full liability is on your books and accounted for. The passing adjustment is just on restating opening balances to capture that $300,000. And then from there, I'm going to go to page 8, and so we'll kind of get into what we call the 30,000-foot airplane ride review of some of the outcome of this year's audit. And so on this page, we've got your general fund. And so when you talk about any local government, the one thing they all have in common is everyone has a general fund. Now, the makeup of what is reported in the general fund can be different, but it's kind of, when anyone wants to go see how an entity did, that's the one place, the first stop everyone's going to make is look at your general fund, and typically it's going to be look at your general fund's fund balance. So we've kind of got a snapshot here for the last 5 years of how your general fund has looked. And so very typical of most governments, your general fund, really, your fund balance is pretty much all unassigned. There's some little buckets of restrictions and non-spendable items, non-spendable items typically being prepaids and inventory balances. And then some assignments where maybe you've made some, management's made some dedications of fund balance in future years, but it's not made at a restricted level. And so you'll see the big part of each bar there is the unassigned. And so at the end of 2021, your unassigned, when you compare it to your annual expenditures of the general fund, was about 39%. And so from a what does that mean benchmark standpoint, GFOA, which is a National Government Finance Officers Association, they do a lot of the evaluation of budget reports and financial statements for awards and certificates in excellent and financial reporting for your financial statements or your budget documents. They've kind of said all along their benchmark is typically about 2 to 3 months of reserve should be in there. Now, so, take that. 25%. Correct. So take that a little bit with a grain of salt, because we like to kind of follow that up with they haven't adjusted that statement in several years now. And so, you all are at that point. Historically, you can look at your numbers, and you've been hovering around there, and this last year we're up to 39%. Where I kind of like to remind everyone is we're seeing costs at a rate not like they were 5 years ago. And so what was 5 years ago a sufficient number to be at, you may want to consider, should we be a little bit higher now? And I've not heard if they're going to amend that number. It's kind of out on their website. Is they've got a whole section dedicated to best practices for local governments, and right now it hasn't been amended for that 25 to 28%, but certainly a lot of people are kind of internally looking and saying maybe we should be a little bit higher because we don't know what's going to happen as far as loss of revenues or even potentially escalating costs in the expenditures bucket.
I was just going to point out I'm just thinking, James is making some really, really good points, but we have to remember when we look at the FY21 year, in particular, the city was pretty much shut down or limited. It's kind of a non-recurring event probably.
Yeah, it was a
in
unique
the sales. Yeah, we had some revenues on the sales tax side, particularly had the largest growth we've ever seen, but yet our cost structure was, you can see where we've been historically.
Right.
Definitely.
Yeah. So a couple of, items to note to that point on the next slide, we'll see it. We did have about $1 million in the coronavirus relief funds this year that most people kind of bottom line, increased your fund balance because it covered costs that were already in your budget. So, it's not free money per their terms, but it kind of was free money in a practicality standpoint. That's right. And so on the next slide, on page 9, we've got your budget analysis, and I think you'll see here kind of what Mr. Arnold was talking about. This year, we like to kind of look at them again. We're at 30,000 feet, so this is very detailed. But you can see you've got your original appropriations that were set by the committee, and then we've got the amendments throughout the year and our final budget compared to actual. So we started the year with an anticipated use of our fund balance of about $3.7 million. We had amendments throughout the year with anticipated use of fund balance of about $5 million, and we ended up adding $8 million to fund balance. And kind of the meat of how that happens is obviously from a revenue standpoint, we had a spike in some of our sales tax, and that's something we've seen across the state. I mean, your state sales tax, your local sales tax, and any of the places that have, I guess, I won't say that aren't rural, but the more of a bigger city you get to, the sales tax spikes were enormous this year because people were just back out, right? And so we budgeted conservatively, and we didn't know what to anticipate, and it just, across the state, everyone saw those revenues come in at a very unexpected level. And so revenues came in at 111% of what we amended our budget to anticipate. And then on the expenditure side, we had a lot of departments down under budget. And I guess the point in here, kind of the last bullet at the bottom of the page, very consistent with what we're seeing in a lot of our industries, but especially in governments, is salary budgets. The actuals compared to the salary numbers are coming in much lower than we budgeted because we're just having a harder time filling positions. And so there is a tangible lack of employee workforce right now that everyone's experiencing, and to some good and some bad, right? So it allows us to have less costs in our actual number, but it affects services. And so, you know, there is that relation there where, we're seeing it across the board. I mean, we're seeing a lack of people coming into the public accounting sector and governments. We've got clients all over the place looking to fill vacancies that are just having a hard time even getting applications, much less qualified applicants. And so there is a workforce shortage.
So it looks like kind of what you ran over, massive revenue increases over budgeted. And then, as we knew, we were shut down for a portion of this time period too, with our furlough program in the early part of that, and then filling positions as well, which made our expenses lower than budget. Okay.
Yeah. And, you know, it's tough to predict futures and how they're going to work. Certainly, you know, one item, if you were tracking closer on expenditures being, you know, closer to actual, being closer to your budget, then there was certainly room for amendments to increase revenue appropriations. But when your gap is so large, the fact that you're $8 million over your budget for your revenues, you know, in a normal year, my recommendation would be let's revisit our budgeting plans because we should have reappropriated those dollars. Mm-hmm. But when you're tracking so far behind the budget, it didn't really affect anything, right? So, I mean, there's the potential that there could have been additional spending, but you're not spending what you already had appropriated. So it kind of washes when you look at that, you know, operationally. If it were a normal year and you had a $13 million swing in your budgeted use of fund balance, I would have some additional questions of, you know, let's look at our budgeting practice. But we didn't come close to our expenditures, so, you know, there wasn't anything much to do with the additional revenues there. On page 10, we're going to look at financial trends for the general fund. Again, your general fund obviously is kind of your main operation, so a lot of people are going to look at this and try to analyze how the year's gone. So we had big injections in the fund balance this year because of expenditure cuts and kind of, you won't call them spikes, but increases in our revenues. You'll see for the current year, and the numbers on the right are all current year numbers. So for the 2021 fiscal year, property taxes accounted for about 31% of our total revenues. And our intergovernmental revenues, which is a mixture of our sales tax and some of our grant revenues, were about another 42%, 43%. And so you can kind of see the trend. We've got the blue bar representing our property taxes. The black bar is our local sales tax, and then the state sales tax is green, and our other grants are down in the orange. So you can kind of see the trend. The one thing to point out in 17 to 18 on the black bar, that's when we kind of picked up our education portion there. So it looks like a huge jump, but it was just a change in kind of the sales tax levy there. And then obviously, as you can see on the trend there, for our property taxes, our revenue has increased about 5% over the past 5 years. And so that's not atypical. So obviously assessed values have changed pretty drastically in the last 3 or 4 years. And so you've seen a lot of places experience some growth in the assessment values of their area.
Proportionally, property taxes, local taxes versus intergovernmental taxes. Do you see, what do you see that across the cities that you look at? I mean, is there issue, are there issues in being heavily reliant on intergovernmental? Not because we don't control necessarily how the state decides to distribute these things.
Try to think of how the best way to say it. There are some places who have a very steady tourist level, and so they're more heavily reliant on sales tax than property tax. The challenge with that is you have to be very comfortable that that's a sustainable income source, because one of the hardest things for a government to do is raise property taxes. And so if you lose the revenue you can't control, you have to turn to the revenue you can control.
Right.
And so it does create a challenge if you have never been very heavily reliant on property taxes and you immediately have to become, because of whatever reason, of a loss of revenue. That's going to be an unpleasant conversation, right? And so most places, if you talk broadly, most places are probably maybe even a little bit more reliant on property taxes, because you all do have a good sales tax here. More on the property tax side. If you can feel comfortable being heavily reliant on sales tax, then obviously that's a good perk for bringing in people, because your property tax rates are going to be so low. But it's a very thin, I guess I would call it maybe uncomfortable line to be on, to where you're relying on a tax that you can't control and can't affect. And so,
It's one of the
it's
things
something.
that we look at, that one of those things that we're monitoring every year is what are those proportions on the things we can control and the things we can't control.
Yeah, I mean, it's definitely something, if you were to continue on the trend where you're adding millions to fund balance and you get up to probably like the 40%, which is where kind of, I think at that point, either you should become very heavily invested in capital projects, because there's always a need for infrastructure improvements everywhere, or revalue where we're looking at our property tax rates, because maybe our services haven't, I don't want to say cut property taxes, right? Because again, the moment you drop them, the need arises and it's harder to bring them back up.
Sure.
But you reevaluate the services you're providing and evaluate, do we have infrastructure needs that we've been ignoring that we could really rededicate these resources and transfer out to capital funds and move those expenditures, and we don't need them for operational, but we've got a lot of other services. Or do we have operational issues where maybe we've struggled in this area and we can rededicate and repurpose our plans? And so there are, I would say, instances where you need to reevaluate how you're using those revenues if they're coming in higher than you anticipate every year. And then at some point, I know the headache of having to raise a property tax.
Oh, yeah.
So I don't necessarily say drop them immediately, as much as once you've done all you
I
can.
think this year is kind of an anomaly.
Right.
The year that we're discussing. I mean, we're in another year now, and we're seeing different trends. I was just curious, your perspective on what those, how those proportionally can affect local governments.
Yeah, I mean, again, someone who has a lot of influx is going to have a higher sales tax percentage. But even that, I mean, a year ago when
Being here, where we're kind of the hub of this 7-county region.
you're going to have more than your neighbors. So. On page 11, kind of switching gears, and again, this is a little bit outside, and the main driver in here is not audited by us, but the other thing that people will tend to look at is the cash flows from your enterprise funds. So, big picture, your proprietary funds, they're on a different basis of accounting than your governmental funds. They have full accrual. They look more traditional like a for-profit entity. They've got all their long-term assets and debts on their books. So really the best way to kind of look at them is a cash flow, because their fund balance or equity net position doesn't look the same, and it's harder to necessarily gauge them. So Typically, we'll look at cash flows to kind of see how things are operating. Usually, in a normal statement, the cash flows from operations is your best way to judge how that operation is working. Obviously, in a transit situation, that's a little bit of an anomaly because there's not, I won't say there's not any, but there is almost not any transit systems that are fully self-sustaining. It's just not something that happens. You just don't generate enough revenue from the riders. So they're all very heavily reliant on grant funding. And so you'll see here, yours is very similar to that. It operates at a loss of about $3.3 million for this last fiscal year, and they brought in about 2.9 of federal funds. Of course, keep in mind that's a cash flow, so operationally it's a little different. But from a cash flow perspective, we had a net decrease in cash of about $350,000 in our transit system this year. Solid waste, obviously, the way you all use your solid waste fund, that's purely the post-closure monitoring there. So we don't really have charges for that. We've just got the monitoring costs that we're paying. So it operates at a loss and will until that closure period is concluded. And then the Community Development Fund is a much smaller fund, but they had a positive cash flow this year of about $20,000. So very, very typical for the type of entities you all have. Keep in mind, and I know this is something they're very aware of, but from a transit standpoint, they had kind of I don't know if you want to call it a good year, but it was the funding sources changed, right? So the COVID money, the CARES money that came out supplemented a lot of their typical transit system funding. And so they got a lot of, I would call it easier money for operations this year. But it is something that even with federal dollars in a normal year, they don't pay 100% of costs. And so they're going to get some user fees, and when they don't have user fees, they're going to rely on other local sources for that. So
on the Jackson Transit, the 65,000 appropriations from the city. So, Paul, we've allocated larger amounts from them. Is that just what they used out of what we budgeted for?
That's last year, yes.
Right, okay.
So last year was kind of the anomaly year. Normally, transit system funding is 80-20, and so they get about 80% of their costs covered with federal funds. With COVID, the funding sources switched to CARES, and CARES paid 100% of the cost. So there was just less need for city help this year. On a traditional year, if we went back and looked, I'm sure the cash flows were a much higher number because it's, again, 20%.
700 plus.
That's all they pulled out.
That's all they pulled out.
Yeah.
This past year.
That's right.
Thanks.
Mhm. All right, so then on to page 12, and starting here, I'll preface with the boring language of journal entries, right? So from an auditing standard standpoint, anytime we identify the need for an adjustment, whether we prepare the adjustment or management prepares it, if we've identified the need for the adjustment and it exceeds our materiality for each opinion unit, our hands are tied and the standards say we have to report that as a material weakness. Doesn't necessarily mean that there's complete lack of controls. I mean, there's instances in here and there's instances with other governments that we work with where you can have one little mistake, and I call it little because it's one in a quantity of how many transactions are processed, that is a big dollar amount, and it gets reported as a material weakness because materially the financial statements would have been wrong without the auditor's involvement. So we've got some material weaknesses that we're reporting in here. We've kind of met with management on all of these to kind of go through how to make sure these don't happen going forward, and some of this is cleaning up items that have been there in the past. So we'll go through these, and any questions, please feel free to jump in. But the first item deals with revenue recognition. So we try to take journal entries that we have, and when they're similar transaction types, even if it's different funds, we'll put them into one reporting instance. But we had a few adjustments dealing with the timing of when items are recognized as revenue, not the lack of recording them at all. So the first item deals with revenue recognition being in governmental funds when we accrue a receivable. If it's not collected within a certain availability period of 60 days, which is your city policy, it should be deferred and recognized in the next fiscal year. And so we made adjustments to take things out of this year's revenue, defer them, and recognize them into next year. So that's the first bullet on there. And then the second bullet deals with property tax allowance calculations. And so the city management, basically through this year's audit, we've kind of concluded has relied heavily on the auditors in the past to help determine those numbers, and really the allowances should be something management's made those estimates on. And so we've made changes in the process for making allowances going forward, but through that, there was an adjustment in the debt service fund where the balance hasn't been adjusted in a while, and so we've adjusted that for the 31,000, dealing with uncollected taxes from prior levy years. And then on community development, this dealt with some of the loan receivable programs. In the end, kind of the underlying issue was there was a subledger maintaining the tracking of the loan programs that wasn't integrated to the general ledger. So the trial balances in your books were not being updated with kind of the activity of what the community development folks were doing. And so marrying those two and bringing them to the same information, there were adjustments to capture loans which had been made in the prior year but were not being reported as receivables, had been reported as just expenditures in the general ledger. And so adjustments to kind of true up the general ledger to match the subledger is kind of the bulk of what's in that third bullet there. On page 13, the first item here deals with the expenditure and expense recognition. This first bullet, I think management's, I'm not sure where we stand. Obviously, we haven't started the audit for the next year, but management had a letter from the state looking to get an updated estimate for the post-closure because our original estimate was from 2012, and it hasn't been kind of adjusted for, at a minimum, you would take a liability at the origination of your post-closure period and then at least capture inflationary charge changes because monitoring rates from 2012 are not the same as they are in 2021. So our adjustment is to capture that inflationary effect, and so it increased the liability by about $25,000, capturing what should have been the inflationary costs, which line up with more of our actual costs that we're having anyway in the monitoring. Again, you go back to the slide a few pages back on our cash flows as it relates to the post-closure monitoring.
That work's underway, so Tom is contracted with another engineer for that.
Okay.
That works on it.
Okay.
Recently, we did that, correct?
Right, it's underway now.
Okay.
Actually.
Yeah.
And then the second bullet is the education foundation. And so we had a contingency contract where essentially we would have to report liabilities to this entity based on our collections, and that's not been on the books. It was something management identified and brought to our attention, but because it has a material effect affecting the prior year with that past adjustment, as we talked about, that item has been reported in here. Again, it's $800,000 in total to the general fund for the liabilities. Capital assets wise, I think this is something that going forward will be a very easy elimination of this entry as a whole. But capital assets has been something the city's been working to try to get their arms around, I think, for a couple of years now. And so it's a work in progress. We kind of came in and a lot of the capital asset records were in what we kind of typically see in a very small entity, a lot of Excel files and a lot of tabs within Excel files, not the best of dates of installation, lives of, estimated lives of depreciation, and kind of really tough for management to aggregate. So management had us incorporate those into our software so that they can then have a better detail of information that's not in an Excel file to import into the new system. I think you're in the process of getting that uploaded now. And so, but through that process, there were, a lot of changes with having to make estimates. Again, this goes back to your capital assets from ultimately 2003 when governments had to pick up capital assets. And so there were no specific dates. They were just general years when things were acquired. And we've talked about this a little bit. It's certainly going to be, once they get everything in, a good idea to do an inventory of what you have, because even just the descriptions of assets that have been in there for years and years, we don't know, management's not sure what they relate to and if we still have that kind of item. And so it's still a work in progress. But as far as the journal entries go, we've now got everything into the system, into a system and not a spreadsheet. And it's the adjustments that were needed to get everything accounted for and picked up, both with some current year activity that was being not capitalized in the current year, as well as just restating some of the beginning balances when you kind of have to change that estimated installation date, it changes your accumulated depreciation. So operationally, this has been a big item that we've been working with the city, and certainly will continue to work to get it kind of a little more traditionally what you would see at a government your size and with your records. And so get those something a little more on your normal process of the closeout, if you will.
And so our new, the Tyler Munis software will help us tremendously in managing this, right?
That's right. And
But in that interim period,
right. Yeah.
for this year,
As James noted, and we certainly appreciate Modern and Jenkins on this particular issue, because this was very demanding on their part, and they went the extra mile, as James described, to help us clean this up and at least get this into your system, and that's available to us now. During this interim period like this year, the Tyler Munis day now, if we can stay on target, is July 1 of '23, so we're a year away from having access to that. We are in much better shape, thanks to Malden and Jenkins, than we were previously, and a year from now, we should be where we need to be, so. Basically, one fiscal year from now.
Right. On slide 14, these are kind of what I would say to the point, again, just big dollar amount journal entries, but these are year-end closeout type transactions. And so this isn't something with a day-to-day cash receipting, but basically the property taxes for the current year's levy, management had not booked those items. I think maybe just some difference in who's responsible for making sure those are recorded. So again, kind of to the point, and we've talked to them about this, you know, if the auditors are the ones making the adjustments, then it's not a working control environment for the city to materially correctly report their financials. So they helped get us all the information. They determined what the answers would be. These are journal entries that we've had to post. And so we recorded the current year digest billings for the 21 digest, which you all record as a receivable and a deferred revenue, similar to an unearned revenue in your financials, because they're for next 22 fiscal year. But so those adjustments were about $1 million for the general fund and $800,000 for debt service fund. And then we also had an adjustment for the court fines, and so that's very similar to the notes that we talked about on the prior page. This is just one where the court maintains their detailed listing of the fines receivable, and it was not being provided to management. So when we went to ask, the report we got was drastically different than what's in the books. And so the adjustment was necessary to bring the general ledger in line with the subledger. And so again, you know, big picture, these are things we've met with Mr. Arnold and Kathy, and we're gonna, you know, certainly in the interim, make sure that these are on the radar, but they're things that can easily be adjusted. These are year-end closeout processes that were not in place that are now being put in place. And
That's correct.
you know, we don't anticipate the need for any of those type of adjustments that we've now previously discussed for the 22 closeout. And so that's certainly things that we would say are very easily fixable, correctable, and I believe they're on the process to do that. So page 15, I won't go through too much detail other than to just say the way the comptroller's office works. If you have an investigative report that they provide, we also have to reiterate and put the same thing in our report. And so I believe everyone here has heard all of these items. It's nothing new. I know they presented to the committee. So these are all the same bullets that you've seen in a previous version, but this is the comptroller's investigative report, and so that has to be in there. And then on page 16, we did have one item that we report as kind of a significant deficiency. It's certainly something that as time goes on, we'll help and try to mitigate where we can. But obviously in your finance department, you have a limited number of individuals, and they have a lot of access. And so anytime you have a lack of the ability to segregate responsibilities, there is a concern. Now, there's always what we call the cost to benefit evaluation that you all as a governing body would have to do. You know, is it enough of a concern that we need to hire more people, or is there compensating controls that we can put in place to help mitigate some of these accesses? But again, with your mainly two people in the finance department handling all of your accounting transactions, they have the access and the ability to have access to all phases of the transaction. And so, you know, we did not have anything in here that all of our material weaknesses have been reported to you. So that's not to say that they're doing anything that they shouldn't be, but again, from a good control standpoint, they built just the fact that they have access to all facets of a transaction process is something that we feel should be communicated to governance at any point in time.
It goes to what we discussed on Tuesday as far as staffing levels, and so I guess what James is saying here, there's kind of two approaches. One is staffing, and in order to have that segregation of duties, or the other is kind of some control policies. to
Right.
make sure
And-
that-
Right, and the good news is, we have a new staff level position, accountant, that starts April the 11th. And we're grateful for that. Thank you. Yeah.
Okay. Yeah. And so will that staff member allow us to segregate?
Sure, yeah, absolutely.
To the
More
appropriate levels that
yeah.
we need to?
Well, yeah, I'm not sure one person's gonna get us
I
Yeah,
don't doubt it would get all the way there.
all the
but-
way there, but
Yeah.
absolutely, it should be
but
well.
that's the type of finding that I'm sure you'll always point out, as long as you, I mean, you'll bring it up every year, even if
Until-
there's mitigating controls, to say, hey, keep the watch.
Yeah.
Typically, if there's enough separation in the processes, then we don't bring it up as a issue. If there's still access, then it'll still be
Yeah,
in
that's-
there.
that's
And
what
so,
I'm getting at. That's what I'm
again,
asking.
okay, yes, to that point, if we separate responsibilities and maybe there's people doing things in a segregated fashion, but everyone still has access,
Yeah.
the one thing we don't want to happen is someone go in and abuse that access, and then, it's something we've not had it brought to your attention, that it still is a risk. So if we take it off and it still is something that they still have access to do that, then we certainly want to make sure you're still aware, like they've segregated the process, but we still have an access problem.
All right.
And then on page 17, in your printed versions, I'll say the second item in number 17 was wrong, and it was caught by our reviewer. So when we printed these, they were wrong there. But for compensated absence, basically these are management letter recommendations. Let me back up. These are items that we have identified through the audit. They don't raise to the level of a deficiency, but they're items where we made comments to management where there can be improvements to the processes. And so in compensated absence, they were accruing all of the payroll benefits with that. However, with the implementation of GASB 68, which dealt with bringing on your net pension liability, the standards changed and said you don't pick up your pension contributions in that compensated absence accrual now because they're already embedded in the estimate for your net pension liability. So you're essentially doubling up your liabilities by doing it in both places. And so we took that out of the compensated absence accrual this year, and so it was about $336,000 of expenses that came out of there because they're already factored in to your retirement contributions for the pension liability. For the receivables, the one that will show up in the final version is we just had just a general comment here. I guess we would say it's very atypical. I know Jackson Energy does the billing and collections for you all, but when we were trying to do some analytics on the activity, we kind of realized through discussion that there's not much that the city gets in the way of anything more than just this is how much we collected this month. And
Yeah,
so,
actually, yeah,
We
and we shared that with you, and actually, Councilman Taylor and I were in a meeting the last couple of days with solid waste management team regarding a number of issues, and I brought that up, and to my surprise, pleasantly surprised, we are receiving, but it was just housed.
and
It
somewhere-
wasn't ever making its way to City Hall. So I have that upstairs, by the way. I'll be happy to provide that to you. So we're getting a detailed subsidiary AR. We're getting a write-off report. We're getting a reconciliation from JEA each month. It's just, it's
Wasn't
been,
given the right
it wasn't
place.
given right. And
Okay.
I wasn't
Well,
aware of it.
and in the end, that was all our point was.
Yeah,
is
exactly.
From a management standpoint, that seems like some information that
Yeah.
if I were the city, I would want to
Yeah,
have.
That's right. And
so-
I'll get you a copy of that so you can see that.
Okay. And then on page 18, the first item, I think management will very strongly echo this comment, and I know it's a little irrelevant at this point now that we're in the process of converting to Tyler. But your system that you're currently on is very point in time, and it doesn't have the ability to go back and run any information. So if you didn't think about capturing data at a certain point in time, it's gone. And so operationally, that's just not a great thing for a local government. It's typically what we would see in antiquated systems that are no longer being used. I know at this point you all have already made the migration, so we won't beat it up at this point, but yeah. And then also, we were looking at the fuel pumps and some of the reports that we get there. And I don't know that at the moment I have a great answer for this, but there's a process when the users of the fuel pump are logging their results that they can manually enter in whatever mileage they want. And so we were getting a very wide array of misinformation, because when someone logs in what mileage they're at and what mileage they have used, it's everything from 0 to billions of miles, and it just doesn't make any sense. It's clearly something that through the manual process, whether the users don't understand the purpose of the report or they fat finger something, whatever it may be, there was way too much manual input to have the reports be of any value to the users. And so if we're trying to utilize our fuel system reporting, it seems like we need to move, and I know you can't automate car mileage quite as easily as you can just, gallons coming from the pump, but there needs to be a better system in place to identify that, even if it is putting a person whose sole responsibility is to log that information. And it just, that comes down again to cost benefit. How much do you want that information to be accurate? Because as with any process, the more manual hands you have in the process, the more likely it is to be wrong. And so if we've got that many end users manually inputting, you're going to get bad data inevitably. And then as far as timely cash deposits, obviously from a state requirement standpoint, you have a certain amount of days that you're supposed to maintain cash in hand before it makes it to the bank. We did look at the police department on their seizures, and we had about 85% of the cash seizures and 50% of the Metro Department narcotic seizures were outside of their 5-day policy. I'll say it's a big percentage. It was a relatively small dollar amount, and so we have a requirement to report material noncompliance with state law. This was not even close to our material levels, so we're reporting it for acknowledgement of the gap there. Again, our recommendation to management, you always have to evaluate the cash benefit. So some of these were, $5, $10 that they didn't make it to the bank for 20 days. Is it enough of a burden that we want to have them take $5 to the bank to make sure they're within the 5-day period and emphasize that, or is that non-compliance something you all are willing to accept? And so there's always, again, a cash benefit and our cost benefit analysis, but either way, through our testing, we did have several instances where we weren't within the 5-day period. And then starting on page 19, I'm going to just skip over most of this other than to just say GASB has been really busy in creating new accounting standards, and then as of late, they've slowed down. So currently, we have from 87 to 97 is applicable, and they'll be applicable starting in 22, going on for several years of new accounting statements that come out and that the city's management team will have to address and evaluate how it affects the city and their reporting. The only one in here that I do want to point out, just outside of your leisure reading, we'll call it, is GASB statement number 87, and it deals with lease accounting. This is one that at this point most governments are kind of in the middle of trying to assess what does this mean to us. It's essentially doing away with the old terms of operating and capital leases, and now basically in a nutshell, if you have any contracts where you've made agreements to make periods that extend beyond 12 months for the use or the access to an asset, then you have a lease. And at that point, it's just called a lease. So anything where we may have had, all the way down to like copier leases, you have to evaluate, we have a 3-year contract with the copier. We don't own those copiers. They're going to take them back at the end of 3 years, but we have a right to use them. And so now we have to evaluate what does that mean to our financials. And as with any statement, you have materiality to evaluate. So if these copiers come up to be $12,000, it's not material to the city. but you have to evaluate all of these, and then in total, see what does this mean as far as do we have new liabilities and new right-to-use assets that we have to record. And it goes both ways. And so we have to look at this as a lessee and lessor. And so if we have facilities that we've entered into contracts for other entities to use, we might have, receivables that we need to record.
We're
And so
working on it.
It,
So, the starting point, all of that is just to identify and capture all of the contracts in place. And that's, unfortunately, that's the stage we're at right now. But we understand it as James described it, and we're working on that. But it's a big deal, because
Yeah.
there's a lot of them, so.
and that's the hardest part, is everybody's got to get their arms around it, because there's
Yeah.
so many of these
Yeah.
that we have found from talking to clients that haven't historically always come through finance.
Yeah.
And so to know what all we have out there is a adventure. And so that's the only one that's really coming out in the immediate, with a direct immediate impact. Going to page 23, just for your information, 23 into 24, one of the things we do as a firm is we do provide free quarterly education, and sometimes it's more frequent than that. But we have free quarterly education, which is virtual, and then we also have newsletters that we send out. We try to use these as tools to help management kind of stay aware of accounting statements and standards as they're coming out, as well as any significant changes. For the last probably 3-4 months now, we've had a lot of pop-up classes from an hour to a whole day on the federal funding, because obviously ARPA's been the biggest question everybody has had for the past, 9 months maybe. So we've had our compliance team really doing a lot of good classes and teaching on that. On page 24, the thing to point out here is that in that last paragraph there, the way we do all these is through email. And so if you have any interest, it's for both management and governing bodies at our clients. And so if you have any interest in getting these, you can email Paige Verco and then copy my email as well, and we'll get you signed up on these lists. And basically each quarter or each time we have a session or a newsletter, you'll get an email. If you want to attend, you click on the link and register and sign up. If you have no interest in it, you can delete it and move on.
Sandy, could you get this committee and the council on that newsletter?
Yeah. And with that's the presentation I have. I don't, maybe went a little longer than you all were planning, but if you have any questions, I've got the statements pulled up, but again, these management's gone through these. We've got all of the information in there, and we kind of touched on the highlights of the things that I would point out here. So if you have any questions, I'd be happy to answer.
I was going to say, actually, back on page 17, those paragraphs are identical, where it's talking about the acute absences.
That's
Is
correct.
that supposed to be that way?
Well, it's not. So it's
Okay.
different on this version. When I got there, that was the page that
Okay.
processing called me and told me I have a duplicate. And so
Okay.
your version that you have printed is wrong, but the
Yes.
final version will have
Okay.
the comment about the
Solid
the
waste.
information from Jackson Energy.
Yeah, I'll get that to you.
Any questions for Mr. Dent? We may, as we digest through this, may have some questions. We got this yesterday, I believe, so as we kind of digest through the statement itself, and as we get to the council level here in a couple of weeks, if there's any questions that this committee sees, we can approach those at that time.
Absolutely.
And for the record, and just because it's true, I want to recognize Malden and Jenkins and James and his staff, everybody we worked with. I believe we would both agree this was a challenging audit for us, but it was also challenging for your firm as well. And I commend you and thank you. Y'all were very professional in everything you did and very helpful.
Thank you.
And we concur with every comment James made in the findings. Those are real, and we're committed to continue to do our best to resolve those.
And just a procedural question. Typically, when local government has an audit committee and the council presentation is usually, I don't even really pull this up. It's more very high level, just discussion. If you want, I can have this presentation at the council meeting and maybe go through a little quicker. But It's usually not nearly as detailed.
Yeah, I thought the presentation was good and informative. I wouldn't mind seeing it at the council level too. I think it's important. While we will, at the next meeting, is going to bring this up, we'll start working through and setting, our obligation as the audit committee is to confirm and feel comfortable with management's approach to resolving the issues that pointed out. So we'll continue to work with the internal auditor's office and Mr. Arnold to make sure we got a good path to making sure that we resolve any findings and even the comments and recommendations. But I think it's good for the council to hear this as well. And then once we get the final audit numbers, we'll go through and do some processing of that just to see what trajectory we were on this past year. But I would think this is a good presentation.
Thank you.
Any other questions, comments? Again, thank you. No, he's fine.
Oh, okay.
And I appreciate your travel down here,
Yeah.
and thank you to you and your firm for the work that y'all put in. It's a good step for us to get in the right direction. We know we've got a lot of technology issues that we're gonna have to overcome here in the coming years, and hopefully we can make Bobby's job a little bit easier, with the implementation of some of those.
I think he'll
Thank
like
you.
it.
Yeah, I think we all will. All right. Thank you very much.
Thank you, Judge.
Thank you all.
Thank you. Safe travels.
Thank you.
We'll go ahead and move on to item B, our revenue report for this past month. Bobby, if you
Yeah,
could-
I'll be extremely brief here, and today is sales tax payment day for March, so I don't have March's number, that's today. But through the month of February, local sales tax in total, so this would be both the school tax and extra school tax time, we are 7.6% ahead of the prior year through February. That's about $1.1 million. On the state sales tax side, we're tracking, thank you, 14%, 14.2% above the prior year. And essentially, our budget was basically the prior year. So the budget variance, the budget variances would be very similar. But these are prior year variances. That's about $630,000. So good, the good news, positive results continue. It's something we do need to monitor very closely between now and the end of the fiscal year and the approval of next year's budget. It's just like we were last year. Difficult spot to transition from one year and approve the budget for next year, but we'll continue to watch these numbers very closely. So, and I know there's a lot of consideration at the state level now, about particularly with, we do have the inflation factor this year to consider in the equation about our projections that we didn't have last year. And, read a few articles about how that works, and I guess the takeaway from would be higher inflation can result in people spending less money, right? And so we'll just have to evaluate all that, but that's where we are today. So.
Okay. Any questions on those revenues? If not, item C, internal audit update. Ms. McKinney, can you just give us a real quick update?
Real quick update. The major item of importance for this month is that Paul and I met with Attorney Cobb on the governance of the operations for JTA, and we got some good information on how to proceed with their operational issues there. We're currently working with JTA to establish uniform purchasing practices in line with the city of Jackson, and just ensuring that they stay on track because this is kind of new for them in that area. Now, although the immediate compliance issues have been handled or on their way to be handled, we're kind of on the backside of that. There are some other issues that we're going to still have to work with JTA on. We have an issue with healthcare costs and other issues that we're working with risk management on to try and get a grasp of how to correct that. They are currently, healthcare costs, of course, are rising, and they've been paying and reimbursing the city at a just same rate. So we're working on that to try and have some presentation for the budget committee to see which way we want to go to try and resolve that. So immediate issues are taken care of, but it is a big operation where there is a lot of work that still needs to occur to bring them in compliance totally with the City of Jackson operations, so.
Yeah, really, we're trying to fold them into our budget process too, so that we're aware of what their operational, their capital needs are. I think what we talked about earlier, that we've had a standing line item where we just kind of have 700 some change available to them, but just to be more fiscally responsible, trying to get them to bring us what their needs are, capital or otherwise, so that we can address those, how we do with a lot of these other entities that we engage with.
Are they receptive to all that? 'Cause that's a big change. For them.
They are receptive. It just takes, you know, a lot of training right now just to get them on track, but they are receptive into just doing it right.
All right, item A under business, budget amendment review for recreation and parks seasonal employee pay.
So, very quickly, the summary story on this is, our Parks and Rec Department employees, seasonal, young
Summer
people,
camp
summer
workers.
camp workers, that kind of thing. As does, the Boys and Girls Club and some other organizations. Juvenile Court has a summer youth, employment program that through juvenile court, and what we have found is that, all of these other agencies were, basically, they had already upped the compensation and paying basically twice what city was paying for our position. So it's a recruitment issue. The cost to do that, as best I understand it from all of Tony's calculations, and we've kind of gone back and looked at it, but it appears, and it's a seasonal thing, but it's $61,348 to bring those rates up to market. That'd come out
For
of
this
fund
fiscal
balance. Yeah, come out of fund balance.
And that would go, so my understanding, or the juvenile court was being paid more than the kids that weren't in the
They
juvenile
were,
court
yeah.
system.
So if you're in the juvenile court system, you were being paid more than the children who were not in the juvenile court system.
What's that expense as is before the proposed 61,000?
What's that now?
You said this would be an increase of
61,000.
So what's the current?
So what's the current?
Budget.
Do you have a
Well,
rough idea?
of course, we just did it by the general ledger,
Salaries.
yeah.
Oh,
That's all.
Salaries.
Okay,
Yeah.
gotcha.
So,
But it's, I think they
it was
were-
almost,
They were
I'm
like
Oh.
$8 an hour.
$8 an hour, and they're going
And
to
this
13.
goes to 13.
Okay.
Yeah.
You know,
Okay.
Now, I have a question. Would this be included, or was this included in the compensation study?
That's what I was gonna ask.
Okay.
Does that include seasonal
I'm
workers?
pretty sure season, I don't know for sure, but I do not believe that seasonal workers were a part of that study.
Because, yeah, like, the thought is, I guess we've got, do we have any other seasonal workers?
we have them at the ballpark.
The ballpark.
I mean, the sportsplex.
Yeah.
Well, those have been increased
Those-
recently
those
too.
were increased.
But they had
Is that not all of that?
I don't know. I can find out, but I
Are we
can't.
summer staffing adequately, or is that just kind of a,
Yeah.
here's what we've always done sort of number?
We can ask Lynn,
I
but
doubt
I
it
don't
does,
think
but-
it's ever included.
Oh, okay.
Yeah,
But I don't know.
Okay. I don't think with kind of the limited information we have, I don't know about making a recommendation. We'll just go ahead and take this to the council level for their approval, unless anybody has a recommendation to make. I mean, it seems that we're gonna have a recruiting issue
Yeah.
if we don't address this. And I don't think it's fair for a kid
Right.
who's gotten in trouble to get paid more than the kid who isn't in trouble.
Right, right.
But that I'm going to skip down to C, because I think this is what I brought up at the end of the last meeting. We need to have some discussions. I think we understand the audit committee role. You know, the budget committee in the past has been, we made a lot of recommendations on like procedure and policy and the way that we've addressed those. And this is one of those things, that these budget amendment reviews. I'd like to get some kind of system in place where we're reviewing these budget and making recommendations on them, and so that, one, we kind of establish a process. Now, there's a timeline issue that I could see us having with this, but that's some discussion we need to have, is what is the role of the budget committee moving forward? You know, when we came on here, the goal was really to kind of look at the way that we're budgeting things and start to tackle some of these issues. We've made a lot of headway over the last couple of years in doing that. But at some point, we need to transition into where the majority of these meetings are about, like, looking at the budget and these amendments that are coming before us, because some come to us, some don't. And really starting to look at, you know, I track out of a request from Bobby, you know, what is that fund balance every month? And when these budget amendments happen, you know, like we've paid police officers and fire department this year, which is, you know, big $1 million swings in fund balance. And those have come before us, but then there's other things that haven't. So what I'm trying to look to is how do we kind of standardize what comes here and start to work with the mayor and Bobby's office to make sure that we're not making it more of a burden to get the timeline, but it gives us an opportunity to kind of review those budget amendments, and if there's financing associated with it, like with the police cars,
Right.
we can tackle that and give some good recommendation to the council. I think we need to kind of come up with what that threshold looks like. If it's something small, or if it's a recoverable damage, you know, damages or something like that. I don't see us need to review that, but
I agree with you.
yeah, I'm just trying to
I mean,
figure out what's this look like in year 4, 5, 6, 10, and beyond.
Well, I agree with you, and I would also, my personal belief would be, the council may want to look at the mayor approval that, with the subsequent reporting. So less than $10,000 now, you know, the mayor can approve those. And they're reported at the next meeting. That seems to work really well, but you'll see next meeting's agenda, there's a lengthy number of budget amendments on there, and so I personally think it might be, you know, can't speak for the mayor, you know, but insurance recoveries, and frankly, that's something that, you know, we started because, you know, all the funds have to be appropriated, right? And those particular insurance recoveries in the past were never being appropriated and approved. And had some occasions where they were being used for things other than repairing what was damaged and things like that. But it has generated a lot more budget amendments, as you know.
And in those instances, I mean, I wouldn't, as a council member, I wouldn't mind kind of consolidating those into one, you know, every month. Here's all of our insurance recoveries, because we're getting 2, 3, 5, depends.
Oh, yeah, there's a bunch of them.
Right, you know, a month, you know, here's our insurance recoveries, and we can make, it's just one item rather than 7 items that we're looking through, but we still have to appropriate them.
The other thing, you know, not to get us sidetracked, but we are gonna have ARPA funds next year, hopefully. You know, included in the budget, and this next month, you're gonna see some amendments to, you know, related to the ARPA funds for this year. You know, where some money was left over and they wanna use it for something else. It's just there's a lot more transactions. So, anyway.
That's where I'd like us to think about moving, is how do we integrate this committee into the budget? We've kind of helped to create the budget process, but now how do we integrate this into the ongoing budget process throughout the year?
There's been a lot of creating and addressing old issues.
That's
at this
right.
point. Now it's just trying to.
Now it's how do we stay on pace? And there will be things that are gonna pop up, I mean, like we went over today.
Right.
But, you know, what does this look like in year 4, 5, 6? How do we transition? I think we've got a good, you know, lead from the comptroller on what our audit responsibilities are. But as far as our budget responsibilities, I think we need to refine that a little bit.
So are you looking for this committee to, like, kind of be and, you know, like you said, set that certain level of changes, you know, would come before this committee, and then this committee then puts a report together that goes to the council so that they know, so they can ask questions they need to, but they don't have to address every single thing.
Yeah, well, I think like if we had.
Unless they want to. But
That's right.
If it all comes from.
Well, here's where, when
different
we
places,
set
they've
this
got-
up, we didn't want to become, become the body that approves the budget, right? I mean, we
Right.
can't, technically, we can't
Right.
do that, and we didn't want to take the budgeting responsibilities away from the council, because that is ultimately the council's
That's right,
job. But, so we exist to, you know, recommend these things and have them look. So if we start, for example, like I talked about, we've drawn a lot down on our fund balance this year. Well, we're below that 25%. I think we're right hovering around it maybe, on our fund balance as of today. And so those are the kind of things that, if we're tracking those types, and when these budget amendments, if we don't see the budget amendments here, we can't track them to give a recommendation to the council.
Right.
So if we're tracking all that and we say, okay, hey, we're getting close, you know, we're at 28% now, you guys should start thinking, we can do that through policy too. But we need to have, I think we need to have more eyes on the day-to-day, month-to-month kind of process of what we're going through, to make sure that we don't spend off the deep end. And to track revenues. I mean, if we see our revenues go up to what
Well,
Mr.
that's the
Benson
point I
was
was gonna
saying.
make,
Yeah.
is, you know, we've got million plus dollar, $2 million favorable variance on sales tax between state and local this year, and we don't amend our budget.
Right, well, exactly, I think he had a great point
Yeah, he
there.
did, man, he did, he.
You know, is
he's
that,
right.
hey, if we
Yeah,
see
and-
revenue growth well beyond, expense growth, then we need to be spending that.
Yeah,
You
and,
know.
and frankly, I know, Paul, you and Ross understand this, being on the council, but you mentioned the public safety compensation increases this year. Well, you know, we did it mid-year, but to help the council
See
have
the
clear
impact.
vision on that, you know, we amended the budget for 12
whole
months,
thing.
right?
Right.
You know.
We hadn't spent all that.
We haven't, no, that's right. And so the whole process can be improved. Kind of works both ways. Some of the stuff that's coming out of fund balance, you know, we could increase our sales tax revenue.
Mhm.
We should be looking other places in the budget, you know, for budgeted funds that we're not gonna use, that could be moved. The whole process, we've made a lot of progress, but there's much improvement.
I agree, and that's what I want us, over the next couple of months, to really put our heads to, is how can we continue to improve the process?
Yeah, and, you know,
And-
there is, you know, the mayor's office, you know, they kind of need to be here for the discussion, you
Mhm.
know, because a lot of these opportunities to, you know, not continually go to fund balance, right? And not continually bump up the budget for expenditures that are justified and needed, you know, without looking somewhere else in the budget or without recognizing through the budget process, you know, our revenue variances that we have. I mean, it's quite involved to do that, and, you know, it involves other departments, department head buy-in, lots of communication has to take place. So there's one level of what comes to this committee, what goes to the council, you know, sort of discussions, and that's very legitimate discussion. But, you know, how we make decisions about approving the budget, you know, what do we amend the budget for? And we amend the budget for everything, how we go about deciding whether it comes from fund balance or revenues, that's another whole level of work that needs to be.
Well, we have some more time next month, if we do. I know, I'll hop down to our budget calendar here in a second, but these are the types of conversations I hope we can have some informed conversation about, is what is this committee's role moving forward? I think we've understood what it was in the past, but we're at a point of transition right now, and what do we need to become?
Cleaned up what needed to be cleaned up now.
Yeah, I mean,
Now what?
we worked, and you know, we were turning over rocks and killing snakes for the first year. Then it was like trying, you know, the analogies I've used is we were just trying to find a good foundation. I feel like we're there. Now we got to figure out how do we build on top of that, you know. Budget calendar, just kind of give you guys an update. We had a couple marathon meetings the last couple days. With Tuesday and Wednesday, met up here and went through the departments, just kind of at a high level about their budgets, and hearing from them some potential needs and changes that they would have. Bobby and his office are going through the process right now of reviewing all of this that was submitted and that we discussed. I think we had some really good discussion and kind of led us towards some questions that we need to answer over the next couple of weeks. Our goal was to have kind of a good first revision of this to come back to this committee for review and discussion, so that we can understand. One, we've still got some understanding to do on the expense side from some of the questions that were generated the other day, and then we've got some revenue questions that we've got to fill out as far as you know, our property tax assessment year, reassessment year, and some state shared taxes that we're trying to get our heads around. That wasn't reflected in what we looked at the other day, and so we'll be working over the coming weeks to kind of compile that, bring that, and have some discussion on that. That may yield some financing discussion that we're going to have on, you know, what does that look like and how do we break that out? There's been talks about vehicle leases. There's been talks about, you know, maybe a bond issue or capital note. We'll have to start to do that exercise we did a couple of years back where we're looking at the useful life of these things and figuring out what the most appropriate path is or combination of paths. Bobby, any comment?
No, not really. I mean, you know, we kind of regroup tomorrow upstairs. 'Cause we, you know, between this meeting today and the budget hearings the last couple of days, there are a lot of boxes we need to check and kind of get a plan. But the result of that plan would be that on, I guess April 21st is still the day for next month, meeting, that we would be where Paul described. You know, it'll be our best understanding of the budget as of April 21st. And a lot of those questions, a big caveat in that is the reappraisal process, because until that's completed, that process generates some pretty significant questions that have to be addressed. But until that's completed, you know, a third of our revenue is really, you know, and then we are just now beginning to receive some feedback from MTAS and the state level about state shared revenue. There's got to be a discussion with the mayor's office and others about, you know, what we want to propose kind of related to that. And as Paul described, the budget hearings did generate some good insight and some questions from the expense side. So we have a lot of work to do the next 3 weeks, but we're going to get a plan tomorrow to get all that done. So.
Any other general questions on what we've talked about?
Question on the employee compensation report. Do we have an update on when that will be back?
Well, you know, I asked Ms. Henning, and she was hoping the last week of this month.
Okay.
So.
And then following up on that, and this may be more of the mayor's office kind of question, but based off the numbers that we've been reviewing the last couple of days, I'm assuming that's current salaries.
Pretty much what
as
you
is.
saw on salaries is a current snapshot of positions that we're funding now.
Right, okay.
And in current rates.
At current rates.
And
And
there's
then
both
based-
positions and compensation increases that have been asked for, and that's kind of in advance of the study.
Okay.
So, you know, it can get really confusing in a
Yeah.
hurry, but that's,
Well, and that's what I'm getting, like, and then once we get our hands on that study, I guess there's from a mayor level of, hey, what, are we plugging and playing with some of these positions
Well,
or salaries or?
I've had discussions with the mayor, and, you know, the path forward that we kind of agreed on was, kind of what we've started, and that is, let's calculate where we are with positions, rates, salary, right? And then, there have been, requests for people and rate increases, but we're requiring all of those to go through the mayor's office.
Okay.
So I don't know how he's gonna view, you know, because frankly, if you approve some of those, it impacts the compensation study, you gotta go back and adjust the compensation study.
Sure.
I'm not,
Yeah.
to me, it would make, you know, it would make sense to consider the rate increases that have been generated internally, kind of at the same time.
As you're looking at the comp.
That
Yeah.
makes most sense to me.
And not that we're held to that report by
Right,
any means,
exactly.
but I think
No,
we
we're
wanted
not, yeah.
to use that in this process
And
as a
plus,
guide.
To understand the real impact of the compensation study, you know, you have to have a good count on your position control, right? You gotta know how many people.
That you need.
So, yeah, so that part of the approval process for next year really needs to, you know, take place now.
Right.
So,
Yeah, those were some of the discussions that came out on the first day,
Okay, yeah.
was, you know, I was asking how many unfilled positions, just trying to tabulate what that looks like. And, you know, some of those are fillable, but some of those aren't.
Right.
And, you know, if we get up against budgeting and, you know, we're budgeting for 30 unfilled positions that can't be filled, then that money may be more appropriate, better be appropriated somewhere else. And, you know, those are the kind of discussions I anticipate here next month, once we have all this information gathered. Any other questions? If not, thank you guys for your time today, and we ran a little long, but I think it was a good,
All
almost
good
good meeting.
information.
I could add one
Yeah,
more thing.
please.
Just, you mentioned it, but I believe, the direction from the last couple of days, we concluded that I probably will be going ahead and reaching out to the financial advisor
Good
we
point.
used last time, and maybe to, the municipal bond fund folks, just to kind of put our toe in the water. and
Is that
we'll
Piper
understand a little
Jaffrey? Is that?
Piper Jaffrey, is that who?
Is that
we-
who-
No, that was,
We had used them in the past.
well, the city engaged them, a year before you got, you know, for.
They
some-
did that,
They were looking at the school proposal.
that's right,
That's right.
that's
Okay,
right.
that's what it was.
Mhm.
We used, PFM.
PFM,
Yeah,
that's right.
from last time, and then, you know, just to get a feel for rates
Yeah.
and what type of financing, and, you know, a lot of that, what asset would be useful life, and it gets, you know, just to have a little bit of information for when we meet. next
And aren't we
week.
actually required to do that all, like, it's helpful and we'd want to, but aren't we technically required to do that as a municipality?
It
An
depends
advisor?
on what type, there are
Okay.
different requirements for different types of
Okay.
financing tools.
Gotcha.
You know,
So-
bond versus capital outlay, you know,
Yeah.
kind of-
That was gonna be my question is, will PFM help us look at, are they just gonna strictly look at bonds? Or will
Oh, no,
They
no.
help us look at
Yeah,
capital.
they'll do
outlay
anything,
notes
yeah.
and- Okay, lease opportunities.
Yeah.
Okay. All right,
Thank y'all.
no more questions, we'll adjourn. Thank you guys.